Good morning, my dear students. Today we start a new chapter in our learning sessions. We are going live on discussing general awareness. We know that for bank examination, general economic and banking awareness is a major topic. I have always advised you to keep up good reading of the newspapers. Unless you read the newspapers, you cannot succeed in any of these exams. We would always wish if there were somebody to help us comprehend things better. This session, I hope, will help you accomplish that. I shall brief you things that happened in the past week and will let you understand the nitty-gritty of things. So, you may subscribe to our mobile application ICD KOLLAM online. You can join anytime. The classes comprise recorded session as well as live sessions. We will have a lot of live sessions and a very structured recorded session that will help you clear these examinations, right. So, this is about our next offline batch. Offline batch starts on December 29, 2024. Registration is available at icdkollam.in. If you wish to learn directly from us, the next batch is on December 29. Listen, former German Chancellor Angela Merkel has written an autobiography. Angela Merkel served Germany for more than a decade. She was the Chancellor of Germany. Chancellor means Indian equivalent of the Prime Minister. Angela Merkel was a very successful Chancellor of Germany. She took Germany to greater economic heights, and she has written an autobiography. Its name is Freedom, Memoirs 1954 to 1921. So, you may please take note of this. We know that books and authors come for this examination. So, a major book written by a great personality, Angela Merkel of Germany. Her autobiography is titled Freedom, Memoirs 1954-1921. Plastic treaty is a very important one. Plastic treaty. Delegates from nearly 170 countries who gathered in South Korea's Busan in South Korea failed to agree on a framework agreement to eliminate plastic pollution. We are very concerned about the environment and ecology these days. We know that global warming contribute to elimination of life. So, countries recently convened a meeting in Azerbaijan's Baku, the COP29, Conference of Parties 29, to implement the Paris Climate Agreement of 2015. It is a parallel meeting. It is in South Korea. Delegates from nearly 170 countries gathered in South Korea failed to agree on a framework agreement to eliminate plastic pollution. While this was the fifth and officially final round of talks of the Indian intergovernmental negotiations committee that began in 2022, ultimately the share between the blocks of countries, those that saw cutting plastic production as necessary to eliminate plastic waste, and those that didn't prove too wide to overcome. Countries, however, have decided to resume negotiations likely sometimes next year under the tentative banner of INC 5.2. Listen, plastic has to be eliminated. That is what major countries ask for. So, how to eliminate plastic? We know that nearly 10-15 years ago there was a deluge in Bombay. Deluge means flood, major flood in Bombay. All activities in Bombay got disrupted in for 3 to 4 days. Even State Bank of India could not operate for 2 days. Why? Because their central corporate center was under flood. Their data center was under flood. So, the airports and railway stations had to be closed. At the end of the day, when people studied what happened to Bombay, what they had understood was that water could not percolate thanks to having huge layers of plastic underneath the earth. So, plastic is a major challenge that humanity faces. So, new governments across the world are concerned about plastic, and they are thinking how to eliminate plastic. So, this meeting took place in South Korea. What has been India's standpoint, what has been the major standpoint of the developing world and developed world, all these things you should keep in mind. So, have a diary of events. A serious candidate for bank and staff selection railways examination will keep a daily diary of events. Of course, through the mobile app, every week I am giving a lot of questions to you, nearly 100 plus questions every week I am giving, and structured notes are also giving. But you got to have a notebook of yours in which you should jot down major national and international events. That is very important. Shahi Jama Masjid, Sambhal district in UP. Listen, I hope you have been reading this particular thing almost every day in the news, in the newspaper. Motivated litigation aimed at altering the status of a place of worship, a questionable ex parte. It's a typing mistake here. Ex parte. Ex parte means without hearing the other party. Ex parte court order resulted in violent protests that killed 4 people. Listen, there is a law in this country, the Places of Worship Act 1991. This particular act freezes the status of place of worship as on August 15, 1947. As on August 15, 1947, the status of the place of worship are frozen. Meaning, if a particular place belonged to the Hindus, it would belong to Hindus. If it belonged to the Christians or Muslims or Jains or Sikhs, it would belong to them. The status quo ante as on August 15, 1947. There is a law. This particular law of the land was passed in 1991 and it was upheld by the Supreme Court later on. But illegally, lower courts in India still entertain cases that would demand alteration of status. Hindus would say that there was a particular mosque was built upon an old temple which was demolished during the Mughal Empire's time. This particular Shahi Jama Masjid in Sambhal district of UP, a motivated Hindu group moved a local court in Sambhal and demanded that this particular mosque was built upon a place which was which had been demolished by the Mughal Emperor Babur. Without hearing the other party, the court that day itself gave an order asking for survey of the masjid. This resulted in chaos, people protested and police had to use the force and 4 people died. Supreme Court anyway have asked quashed the lower court order, and we have to wait and see what is going to happen. No issue of this kind would have happened had courts and other institutions, governments stuck to this particular act. We have a formal law, we have a law in this particular country that freezes the status of place of worship as on August 15, 1947. It is quite unfortunate. Follow this particular news and let us see what is going to happen. Donald Trump's threat of 100% tariff on BRICS currency. We know that American dollar is a universal currency. When you do international transactions, you can use American dollar, pound sterling, euro. These are the major international currencies which have got international validity. We know that Indian currency is valid only within the territory of India. Indian currency is not accepted in any other country, but American dollar is accepted. It's an accepted international currency. Recently, BRICS countries, in the BRICS summit, Russia and China have decided to come up with they suggested a BRICS currency, meaning a common currency that can be used among the BRICS nations. BRICS nations are 10 in number. We know that BRICS means Brazil, Russia, India, China and South Africa to begin with. Now there are 5 more members. So all these 10 countries can use our own currencies. This was what proposed by Russia and China. India hasn't given a word to that. We have not taken a decision to that. But Donald Trump, the president-elect of the United States of America, have threatened that if we move along with this particular proposal of having BRICS currency, he will impose 100% tariff on imports to America, meaning if we export a particular thing to America, it will attract 100% tax tariff. So that is are we waiting for a war, a currency war? See, many countries nowadays, including India nowadays, are trying to reduce dollar dependability. We know that we are buying oil from Russia by paying in rupee. There is a ruble is a currency of Russia. There is a ruble trade between Russia and India. So when we buy Russian oil, we will pay in rupee. Russia can buy any goods or service from India by paying in ruble. So we are keeping a rupee account. A transaction account is kept. So Russia is the major oil supplier to India. So buying Russian oil, we need not pay in dollar. Of course, the trade embargo against Russia is one of the reasons why we started buying oil from Russia by paying in ruble. But anyway, that has reduced the dollar dependence. You see, yesterday again rupee plummeted against the dollar. Dollar value increased, dollar appreciated, rupee depreciated. So it all shows that dollar value is appreciating and we are losing money when we import things. Our import cost is going up. Anyway, that is why many nations are thinking about moving away from dollar, but still dollar is going to have the dominance in at least in the immediate future and the medium term future, because countries do not trust other countries' currency, especially the renminbi of China. So we are going to, but this move seems to be unrealistic and more symbolic. Donald Trump's decision will be more symbolic than practical, as it may harm US consumers by raising price of imports. Listen, Donald Trump said that he will impose 100% tariff on imports to America. What will happen? American consumers will suffer. So it is more a symbolic, it shows the what is in his mind. He is intolerant to the idea of countries going away from dollar. Jay Shah takes over as the chairman of ICC. Jay Shah is the son of our Home Minister and Home Minister Amit Shah. He has taken over as the chairman of the International Cricket Council. We all know that ICC is the most powerful sports body in the world, and he is the 5th Indian and the youngest ever to head the ICC. Jagmohan Dalmia was the ICC president. So now it is Jay Shah, son of Mr. Amit Shah, who is the new chairperson of the International Cricket Council. Now I will have, don't worry, I will have another video to show you. We will be now discussing. Listen, in a couple of days time, today is December 4, by December 6, by December 6, the Reserve Bank of India will announce the monetary policy. So we have to understand what the monetary policy is all about. I hope this video will help you understand what the monetary policy is all about. Monetary policy is announced 6 times in a year by the Reserve Bank of India. Macroeconomics comprises monetary policy and fiscal policy. Fiscal policy, the word fiscal means that pertains to governmental income and governmental expenditure. Policies announced by the government to influence their income and expenditure, that is broadly called the fiscal policy, which is announced by the government. Any alteration to taxes, any government spending, all these are fiscal matters. Monetary policy is announced by the Reserve Bank of India, who is the monetary authority of the country. Now, monetary policy, regulation of supply of money and cost and availability of credit in the economy. How much money should be made available in the economy for circulation, and what is going to be the cost and availability of credit, meaning the interest rates, cost of credit, cost of loans. These are the broader areas that are covered by the monetary policy. What is the purpose of monetary policy? To maintain price stability, ensure adequate flow of credit to the productive sectors of the economy and overall economic growth. Keep these things in mind. 1. Maintain price stability, ensuring price stability. We all understand that erratic price movements will upset both the buyer and the seller. Every constituent of the economy will be upset if prices are moving erratically. So ensuring price stability is one of the challenges that monetary policy addresses. Then ensuring adequate flow of credit, meaning how much loan should be given to what all sectors and at what all price, meaning at what all interest. Third, overall growth of the economy. So the monetary policy balances two things: one, controlling inflation; on the other side, supporting growth. Variables affected by the monetary policy in the economy: one is interest rates, other is liquidity. Liquidity means the availability of funds, the capacity of an asset to get converted into cash, or the availability of funds. Credit availability, meaning loan availability, and exchange rates. Exchange rates are important when we export and import. So these are the 4 variables that are affected by the monetary policy. For a primer, this video would suffice. I am very confident. If you go through this video a few times and if you understand, then I would say that you would have a good idea about the monetary policy. Fiscal policy, the use of government expenditure and taxation. That is what I said. The word fiscal means that pertains to government expenditure and government income, revenue, taxation, to manage the economy. Government has increased the income tax, government has decreased the GST, government has decided to spend money on defense. All these things are fiscal decisions and fiscal policies that are decided by the government. Purpose of fiscal policy, again, stabilize the economic growth, avoiding boom and bust economic cycle. Variables are aggregate demand and level of economic activity, pattern of resource allocation, distribution of income. When look at this, when income tax is increased, when employment is created, income will get distributed, and when income tax is raised, what will happen? People who are having larger income group, money will be taken from them. And when government provides employment, or when government facilitates employment, income distribution also will take place. Pattern of resource allocation, which sector should get how much money, how much is the spending on agriculture, on defense, on education, all these things. Aggregate demand and level of economic activity. Government can use the tool of taxes to influence every sector. So these are the variables affected by the fiscal policy in the economy. Now, monetary policy regulates supply of money, regulates cost and availability of credit in the economy, deals with both lending and borrowing rates of interest for commercial banks, aims at maintaining price stability, full employment and economic growth. These are the monetary policy elements. Regulates supply of money, how much money must be made available in the economy. Regulates cost and availability of credit. Cost and availability of credit means interest. It is called interest. How much interest will the bank charge when you go to the bank to take a loan? Third, deals with both lending and borrowing rates for interest for commercial banks. Reserve Bank of India varies the interest rates tools available with them, like the repo and the reverse repo, to regulate the lending rates of commercial banks. We will get to know about that later. Aims at maintaining price stability, full employment and economic growth. It aims at price stability, as I told you earlier, and economic growth. It balances, monetary policy balances growth on one side and inflation on the other side. Fiscal policy is defined as the deliberate change in government revenue and expenditure to influence the level of national output and prices. Government can increase taxes, government can reduce taxes. We know that a few years ago the government of India reduced corporate income tax to 22%. It was 30% earlier. It was reduced to 22%. So what happened? Now corporate companies are having more surplus with them, which they can use for their business growth. So that was a deliberate change by the government. Government lost its corporate revenue in corporate income tax, but corporate companies had more surplus with them, which they could invest. Government thought that would spur economic activity. Broader tool with the government used to overcome recession and control inflation. So government on its side tries to control inflation. Government generally controls the supply side, while Reserve Bank of India tries to control the demand side. We know that prices are always directly proportional to demand and inversely proportional to supply. So if prices are going up, imagine that price levels are very high. So to control prices, what should we do? We should try to reduce the demand or try to increase supply. When supply goes up, prices will come down. When demand comes down, prices will come down. Very easy relationship. This demand side is taken over by Reserve Bank of India, controlled by the Reserve Bank, influenced by the Reserve Bank of India, while most of the supply side actions are controlled by the government. So governments look at the supply side, while RBI looks at the demand side to control prices. About monetary policy. Listen, supply of money, rates of interest and economic growth and stability I have already told you. Reserve Bank of India announces its monetary policy 6 times in a year. So it is bi-monthly. It is bi-monthly. 6 times in a year, Reserve Bank of India announces monetary policies to ensure that growth is supported and prices are controlled. 6 times, it is bi-monthly policy. There is a monetary policy committee chaired by the Reserve Bank of India governor. It has members from the RBI, from the government, and economists of merit. Objectives are rapid economic growth, price stability, exchange rate stability, balance of payment equilibrium, and full employment. What is this balance of payment? Balance of payment is a systematic accounting of imports and exports of all tangible and intangible goods of tangible and intangible goods. It's a systematic accounting of all imports and exports. Just take it like that, systematic accounting of all imports and exports. So balance of payment, a country that exports more will have forex surplus, a country imports more will have forex deficit, or balance of payment deficit. A country exports more will have positive balance of payment, country imports more will have negative balance of payment. So these are the things that are the objectives of RBI's monetary policy: rapid economic growth, price stability, and exchange rates. Look at these two things, that will be our major focus. There are two types of monetary policies. One is expansionary policy, next is contractionary policy. Look, expansionary policy means RBI will reduce interest rates and allow more money to get pumped into the market. RBI would make the policies in such a manner that commercial banks generally reduces the interest rates. RBI influences commercial banks to reduce the interest rates, so interest rates may be reduced so that more people will take more loans and more money will come to the market. That is called expansionary. RBI tries to expand the economy, expansionary. It is growth supported. It is supporting the growth. An expansionary monetary policy will support the growth. Next is contractionary, meaning RBI will try to contract the economy. Interest rates will be raised. Interest rate will be raised so that minimum money will come to the market, and that is economic growth will come down, but that is aimed at ensuring price stability. So through a contractionary monetary policy, prices are stabilized. Through a expansionary monetary policy, growth is supported. These are key words that you should understand. Any student of a competitive examination should know these terminologies. Expansionary monetary policy is used to combat unemployment in a recession by lowering interest rates. Look, that's what I said. When you reduce the interest rates through an expansionary monetary policy, interest rates are reduced. When interest rates are reduced, corporations and individuals will take more loans from banks and will use the money for productive expenditure. That will create employment or reduce unemployment. Contractionary monetary policy means increasing interest rates. Why is it done? To combat inflation. I told you that prices are directly proportional to demand and inversely proportional to supply. When interest rates are hiked, demand for loans will come down, meaning less quantity of money will come to the market, which will chase fewer goods, meaning demand will come down and prices will also get stabilized. Easy to understand. So there are two types of monetary policy formats available. One is the expansionary policy, the other is the contractionary policy. Elements of monetary policy: quantitative measures and qualitative measures. What are the quantity? Quantity means the quantum, quality means the influencing, the quality, the influencing elements of the policy. Bank rate, open market operations, cash reserve ratio, statutory liquidity ratio. Look, these are terminologies that are frequently asked for bank exams. You must understand these. And rationing of credit, moral suasion, direct action, regulation in consumer credit, marginal standing facility, and of course liquidity adjustment facility also will come. Liquidity adjustment facility, these are all the monetary policy tools. Bank rate. Bank rate was very key when we learned economics many years ago. Bank rate has lost its sheen these days. Bank rate was called the primary cost of money in the economy. It is a minimum rate at which the central bank provides loans to commercial banks. Look, you should always understand that there is a relationship between commercial banks and Reserve Bank of India. When commercial banks require funds, liquidity, they can approach Reserve Bank of India and get money. When commercial banks have got surplus money, they can park that money with RBI and will get some interest. So bank rate is the rate at which Reserve Bank of India lends money to commercial banks. It is 6.75% now, but listen, bank rate has lost its sheen in economic policy. Now the most dominant factors are repo rate and the reverse repo rate. We shall discuss them later. Open market operations. An open market operation is an instrument of monetary policy which involves buying and selling of government securities or to the public and banks. Listen, you must understand that major revenue to the government are taxes and borrowing. Government can impose taxes and collect money. Government can borrow money from the public and institutions. Commercial banks are required to buy government approved securities or gilt-edged securities or sovereign bonds. Bond is a debt instrument. Suppose State Bank of India buys government bonds worth 100 crore, means State Bank of India is lending money to the government. 100 crore is lent to the government, for which State Bank of India will get some minimum interest, but that is a statutory condition. So this is a continuous process, buying and selling buying and selling of government bonds. Reserve Bank of India, State Bank of India may buy government bonds. State Bank of India on occasions would sell government bonds. It's a continuous operations, that is to control availability of credit in the market. This mechanism influences reserve position of banks, yield on government securities and cost of bank credit. RBI sells government securities to contract the flow of credit and buys government securities to increase credit flow. Open market operation makes bank rate policy effective and maintains stability in government securities market. RBI controls the entire open market operations. Through open market operations, RBI ensures that enough money supply is made available in the market. Open market tools, repo and reverse repo. Repo means repurchase offer rate. It means repurchase offer rate. Repo means repurchase offer rate. Reverse repo means reverse repurchase offer rate. Listen, when do banks require funds? Banks require funds on two occasions. When a depositor comes and asks for his money, bank require funds. Two, when banks have to disburse promised loans. These are the two occasions when banks require funds. So liquidity management is a major concern of every commercial bank. So when banks, suppose State Bank of India requires funds today, but it doesn't have fund. Depositors have come for funds or loans are to be disbursed, but it doesn't have funds. What can it do? It can approach other banks and borrow money. It can approach other financial institutions and borrow money, or it can approach the Reserve Bank of India and borrow money. Reserve Bank of India is the lender of the last resort. It is a lender of the last resort. When commercial banks approach Reserve Bank of India and borrow money, Reserve Bank of India will impose interest. That interest is called the repo rate. Now, if State Bank of India has got surplus funds on a particular day, it can park that funds with RBI and RBI will give interest to Reserve Bank of India, State Bank of India. That is called the reverse repo rate. Repo rate will always be greater than the reverse repo rate. So reverse repo rate is 6.5 and reverse repo is 3.35 now. So reverse repo rate is the rate at which RBI borrows money. Repo rate is the rate at which commercial banks can borrow money from RBI. So now I hope you know what repo and what reverse repos are. Now cash reserve ratio, these are very important terminologies. Each commercial bank has to park a part of their total deposits, total demand and time liabilities, meaning total demand deposits and time deposits, in liquid cash with RBI. That is called the cash reserve ratio. For example, if a particular bank gets 100 rupee deposit today, then a part of this deposit, suppose cash reserve ratio is 3% now, meaning out of this 100, 3% of 3 rupee must be kept in liquid cash with RBI. That is what is called the cash reserve ratio. For this money, RBI will not give any interest to commercial banks, but it is a requirement, RBI's requirement. Each commercial bank has to park a part of their total time and demand liabilities, meaning total deposits, in liquid cash with RBI. When RBI feels that money supply is increasing and causing an upward pressure on inflation, RBI has the option of increasing CRR. When money supply is more than required in the economy, RBI may increase CRR so that RBI can suck more money from the banking system and from the market. Increase in CRR means banks have less funds available. Look, in this particular hypothetical situation, CRR is kept at 3%. So out of 100, 3 rupee is sucked by RBI. When it is increased to say 4%, 4 rupees kept with RBI, or banks will have only 96 rupees to lend. So that is how RBI influence the lendable funds available with the banking system. I hope you understood the point. Statutory liquidity ratio, it is by government statute. When a bank gets say 100 rupee deposit, let's SLR, statutory liquidity, let it be say 18%. Then out of this 100, 18 rupee must be used to buy government approved securities or gilt edged securities, for which they will get some interest, banks will get some interest. I shall explain once again. State Bank of India gets 100 rupee deposit. What is SLR? 18% now. Let it be 18%. So out of this 100, 18 rupee has to be used to buy government approved securities, meaning lend to the government, for which government will give some interest which is very less than the market determined rates. But it is a statutory requirement, so banks have to comply. So both CRR and SLR are quantitative measures which are used to increase or reduce lendable funds available with the banking system. Credit rationing, it refers to a situation where lenders limit the supply of additional credit to borrowers who demand funds, even if the latter are willing to pay higher interest rates. Credit is rationed, meaning ration, you know, limited supply. Credit rationing is done. Minimum of capital, total assets, ratio between capital and total assets can also be prescribed by RBI. Generally, two measures are adopted: imposition of upper limits of the credit available, charging a higher progressive interest rates on banks. Listen, how is credit rationing achieved? One, a limit is given. You will be given only say 10 crore loan, not beyond that, meaning credit is rationed. Second, okay, if you take a higher quantum of loans, more interest will be charged. That is also done to limit credit or credit rationing. Moral suasion, when banks deviate, RBI will continuously write to them, just as a request by RBI to commercial banks to take so and so action, such and such action and measures in such and such trend of the economy. RBI will advise, these are advisory measures. Moral suasion means advisory measures. RBI will continuously write to commercial banks, don't do this, don't do that, etc. That is a moral suasion. RBI may request commercial banks not to give loans for unproductive purpose which does not add to economic growth but increases inflation. RBI may say that banks have to reduce lending against gold. So these are all moral suasion, a kind of a pressure tactics on banks. Continuously RBI will communicate with banks to do a few actions and get back from a few other actions. Direct control. This method is adopted when commercial banks does not cooperate and central bank is achieving its desirable objectives. Listen, we have discussed the moral suasion. RBI will advise, RBI will dictate, but if commercial banks don't mend, then RBI will go for direct action. Prompt corrective action. This is the toughest action by RBI. RBI will impose penalties on commercial banks. RBI will impose tough decisions against banks, but the toughest decision is called the prompt corrective action. Once prompt corrective actions are initiated against commercial banks, then those banks cannot give fresh loans. They cannot induct new employees. They cannot start new branches. So what will happen? They will be under severe pressure and they will mend their ways. Such actions are called direct actions. Monetary policy terminologies. What are the terminologies? Inflation. Inflation refers to rise in prices. Money supply, the quantum of money available in the market. Bank rate, the rate at which Reserve Bank of India lends money to commercial banks. Cash reserve ratio, the total amount, that quantity of money that banks must set aside with RBI against their deposits. Statutory liquidity ratio, percentage of bank funds to be maintained in government approved securities. We have discussed all these things. Repo rate, the rate at which RBI lends money to commercial banks against government securities. Reverse repo rate, rate at which RBI borrows money from other banks. Capital adequacy ratio, it is a capital divided by risk weighted assets. Capital divided by risk weighted assets. Capital means, in Malayalam we call it as Mooladhanam. Asset means loans. In banking parlance, asset means loans. Deposit is a liability and loan is an asset for a bank. Open market operation, purchase and sale of securities in the open market. So thank you very much, my dear students. I shall come with more videos of this kind, and I hope this video helped you understand things about the Reserve Bank of India's monetary policy, and I shall elaborate this particular session by doing the entire week's general awareness. I shall include more videos in the days to come. I shall include more slides. So this weekly event will help you understand things much better and try to improve your connect with the newspapers. I hope you enjoyed. Thank you very much. Have a very nice day ahead. May God